Welcome everyone. Thank you for joining this session. So today we are starting a very important journey, the journey of understanding technical analysis. Have you seen this first slide, a beginner's blueprint to technical analysis? If you see, then just post yes in the comment box. Am I audible to everyone? Yes or no? Let us start with the first slide, a beginner's blueprint to technical analysis. So now first understand this word blueprint. What is a blueprint? So if anybody knows, then tell me what is blueprint. A blueprint is a plan that is created before doing any important work. For example, just a minute. So am I audible to everyone? Is my voice is clear to everyone? So where we are, what is a blueprint? A blueprint is a plan that is created means before doing any important work. For example, Before building a house, an engineer does not start building directly. First, he first First he creates a blueprint. Then blueprint shows where the walls will be, where the doors will be. Without a blueprint, the building may collapse. In the same way, before entering the stock market, we also need a blueprint. That blueprint is called technical analysis. Analysis helps us understand how price moves, why patterns form, when to enter, when we have to exit from the trade. So remember this, trading without knowledge is like building without a blueprint. So to understand better, we take example. Imagine someone gives you money and tells you to build a house without a design. You will feel confused. Firstly, you will feel confused. In the same way, confusion happens when beginners enter trading without learning basics. So, are you seeing in your surroundings successful traders do not guess, they just follow the plan, means according to levels they just enter in the trade or exit from the trade. Now let me explain technical analysis with a very simple example that everyone can understand. So in this second slide we have an example. Let us imagine a very simple situation. You travel to a new city and you visit a busy food street. There are many stalls, each in the same way in the Indian market. There are many stocks and there are many commodities options like gold, silver, and so many other things. So each stall has its best fresh food, special taste. Now you feel confused. How do you choose which stall to eat from? There are usually two types of people. First is researcher. The researcher means they check ingredients, cooking style, hygiene, reviews. Means they collect information before making a decision. This is called fundamental analysis. Means studying company's profit, company data, balance sheet, business growth, each and everything about any stock. Means qualitative data as well as quantitative data. But on the other side, the observer. Now second type of person, they do something different. They simply observe the crowd. Which stall has the longest line? Which stall has people more trust? And they decide if many people are buying this, the food must be good. This is called technical analysis. They just observe the where is the higher crowd, where is the lesser crowd. um, and we also contrast with one real life example. If you see 50 people standing in one food stall line and only two people standing in another stall, most people choose the stall with the crowd because crowds shows demand. And where's the less people, that means less supply or means less demand. In the same way, in in the market where people are buying and where people are selling, that is technical analysis. Means in the fundamental analysis we choose the stock where we have to invest. By using technical analysis we choose the time, at what time we have to enter the trade and from what time we have to exit from the trade. So this is important to understand, and throughout the course we have more focus on the technical analysis. And there are other two distinct approaches to the market. In the market, there are mainly two ways to analyze stock, as I am setting, as I am said to you. Fundamental analysis, technical analysis. Let us understand their difference clearly. Fundamental analysis studies companies' data, profit, revenue, balance sheet, means each and everything related to stock. Its main goal is to find the true value of the company. Means is this company good or not. So suppose you want to buy a car You will check engine condition, mileage, brand, performance. This is like fundamental analysis. Mean you are checking quality before buying. But in technical analysis, you basically studies the price charts, trends, historical movements. Its main goal is to find the best time to buy or sell. Means when should I buy? Means what's the best time to buy any stock? Let's say you already uh, decided which car to buy, but now you wait for the festival discount to get the best price. That timing decision is like technical analysis. Means fundamental analysis tell you what to buy, and technical analysis tell you when to buy. So this is important. If we already choose the stocks that by using fundamental analysis, then we also need to think at what time we have to enter in that particular stock. So reality, here we discuss the realities of the trader. In this, let us talk about the realities of technical trading. Many beginners enter trading with wrong expectations. Means they think trading gives fast money, one trade can make big profit, but reality is different. So we will understood by the real truth step by step. In technical analysis, a trade usually lasts few minutes, few hours, few days, or maybe few weeks. This is mainly short-term approach. Means technical means if we use the technical analysis, we basically use for the short term. Imagine you run a small shop. You don't wait 1 year to make profit. Instead, you sell small items daily. Each day, small profit comes, and after many days, total profit becomes big. Means trading works in the same way. In a shop, you earn small profit on each sale. You don't depend on one big customer. Similarly, in trading, we don't depend on one big trade. We focus on small, consistent profits. So second is returns. Do not expect big profits quickly. Means more focus on the small profits and with consistent profits. And we understand with real life example like think about your salaries. Most people do not earn 1 year salary in one day. They earn monthly salary, slow and steady. So trading also works in the same way. Like if you want to enter in any stock and if you expect bigger returns in single trade, then it's fluke. It's not a relatives of any technical trader. If you want consistent profits and small profits, then you can enter with the small trades and with short expectation. And third point is risk management. If trades means if you predict we want if you predict that this stock's price can go from 100 to 120 or 150. If trade starts losing, means your expectations goes wrong, and in that condition you have to cut the loss quickly. Never hold a losing trade hoping it will recover. And imagine you have a small infection. Means we just to for better understanding of risk management, we understood by real life example. Imagine you have a small infection and doctor says take medicine immediately. If you ignore it in initial way, that small infection can become serious. In same way, in trading, small loss ignores early and becomes big loss later. So if you already in small loss, then you have to quit early to protect by the big loss, to protect from the big loss. And fourth point is the commitment. Technical analysis is not a shortcut. It requires learning, practice, discipline. Means trading success from a discipline. It's not from luck. Means most traders expect it comes from luck, or most beginners thinking that in trading luck works, but not at all. We also a require a niche knowledge. Let us understand why technical analysis works in all conditions. The universal language of price. Technical analysis is called the universal language of price because it works in every market. Like it works in stocks. If you choose any stocks, if it also works in the forex, cryptocurrency, commodities, and bonds. Means learning technical analysis is like the learning driving. Means if you first time you learn driving on one car, but after learning you can drive small car, big car, means any car. So it's like a skill. Means it's like a driving skill. If you learn the technical analysis, you can apply anywhere. Means if it's in the stocks, commodities, foreign exchange, bonds, and crypto. So it's completely dependent on you how you predict the and how you analyze the price behavior of individual stocks and commodities. In the same way, when you learn driving, you can understand the steering, brake, accelerator. After that, car model does not matter. Similarly, when you understand price movement, market type doesn't matter. So now we will discuss the four pillars of technical theory. So first, there are 4 points. First is market discounts everything. How is greater than Y? Price moves in trends. History repeats itself. Means technical analysis is not guessing. It is based on strong principles. So we will study these 4 points. This means all market discounts everything. This means all information is already included in the price. Imagine exam results will be announced tomorrow. So we just by understanding from the example, some students already expect good marks, some expect bad marks. Before results comes, their behavior changes. Some feel confident, some feel nervous. That expectations already exist. Similarly, market expectations already exist before news comes. Means this all news, informations, and global expectations already reflected in the current price. Second is how is more important than why. In technical analysis, we more focus on the how price moves, not why price moves, because it already comes in the next day in the newspaper. It means we just take the example of this and how market discounts everything on the charts. Here's the Nifty charts. As you see, there is a time of war now. War ceasefires happened between Iran and Israel. How market price changes its behavior from downward to upward during the war. During the war time, market price goes down. But when we aware from this news that ceasefire is happened between Iran and Israel, now market takes turns from downward to upward. See, from 2000, from 20,000, 22,000 to 24,000. So now today's charts. Now see, it's today's charts. It's upward trend. Means market discount everything. Means here market price absorbs all kind of positive news and information and global expectations, it's already reflected in share price. So it's very important. Third point is price moves in trends. So here we will discuss the three price moves. First is upward, downward, and sideways. So here you can see there is a price movement. It's This is in upward direction. Means where market makes the high low, like you see here the market makes the high point. Means this just follows the high low, high low in 6. Here you see how market goes upward, and this trend is called upward direction. And another one is, now we see another example of downward. So here you see this market move is in downward direction. Means in this downward direction, market makes the low point, low high. So what it means? Market moves in this way. Market during the upward direction, how markets behave. What it means? It's high. Here's the high low point. Here's the high point. Here's the high low point. Here's the high low point. Means this is in upward direction. And third trend is sideways. Means have you seen most of the time market sideways. So this is sideways market. So this market is sideways. This market just turn out from the resistance level and support level in same zone. This market is in same zone throughout the uh, from 17th April 2026 to around 17th April 2026 4:30. Here timing is 7:30 from morning to evening time. It's completely sideways. Gold is here, gold is sideways. So there are three types of moves. It's First is sideways, second is upward, and here's the downward. So we have to understand price moves in trends. Mean in any market, when you observe the price move moves, either it is in upward trend or downward trend or sideways. Means by using different time frames and using uh, another indicators and all these things, you have to see what's is it price is, price is in upward trend or downward trend. You have to think, you have to observe. And fourth point is history repeat itself. Means human emotions do not change. Fear and greed repeat again and again. Means like take an example of festival shopping. Means during festival sales, people buy more. Even every year, same behavior repeats. Similarly, market behavior repeats over time. Here we also show one example of uh, Nifty. Means if you see these charts, means when market goes down, here you see market just touch around 22,000 level. Means on 24th Feb, now here you see 21st of May. In the same way, market just touch the peak point. Means here this is the peak point. And you can also see this is the peak point. Means on 7th October 2024 and 29th of December 2025. After 2 months, market just downfall from the same level. Means history repeats itself. And here you can also see market comes at this point on 3rd of May, and again market comes on that same level 30th of March. Means history repeats itself. Means human emotions, specifically fear and greed, never change, causing identical price patterns, similar patterns to repeat over the time. Now the DNA of trading period. This is important topic. So millions. Here we have you seen is the high point, close point, low point, open point, and we will learn these points. What's the meaning of these points throughout the day? Here's the opening point 540. Here's the low point around 510. Here's the high point around 650. Here's the closing point around 600. We have to understand what's the meaning of these all 4 points OHLC. Millions of trades happens every day, but to understand price, we simplify everything into four values: open, high, low, close. These open means first price. Just we take the example of day candle. Uh, we take the example of Reliance. You see different types of candles. Means daily frame candles, and this we took the example of one candle here daily. We all know that Indian market opens at 9:50 a.m. and closing at 3:30 p.m. Means just we also understand this market with some local example. Imagine your shop opens at 9 a.m. means Indian market opens at 9:15 a.m. The first sale price of the day means first sale price of the day. Its opening price means opening price is here the OHLC points where you can see is the OHLC these points. Have you seen where's my cursor? These points are OHLC points. Means throughout the day, the first sale price of the day is like open price, and high means highest price reached in that period. Means during the day, what's the highest price? Here the highest price is 1368.40. I can also mark these things for the better understanding. This is important. This is important for you. So this is high point. This is the higher point. This is the closing point, and this one is the closing point. And suppose an auction starts, many people bid. Price goes higher and higher. The highest bid is like higher price, and low means lowest price lowest price reached. During a sale, price falls on the to the lowest point. That lowest price is like low point. Close means last price before market ends, means around 3:30 p.m. means throughout the day, just before ends the market, its closing point. And closing point, it matters more because in cricket, final score matters most, not middle score. Similarly, closing price is very important. OHLC is the DNA of price movement. It's the four key main points of any candlesticks or of any price movement, means OHLC. And next slide is the evolution of charting. Now we understand OHLC, but here's the question is, how do we see this information? We cannot read numbers all the time, so we use charts. So charts helps us visualize price movement. There are mainly three types of charts. One is line chart, bar chart, and last is the most important, the Japanese candlesticks. And these main third Japanese candlesticks we use more and more in the during the trading visualize and to see the price movements. Charts help us visualize price movements. There are mainly three types of charts, as I said: line chart, bar chart, and Japanese candlesticks. A line chart shows only the closing prices. It connects closing prices to form a line. This chart is simple but incomplete. Means by seeing line chart, we cannot get so much information as compared to bar chart and Japanese candlesticks. To understand better, we also I can also give another example. Imagine you check daily temperature. You need record the temperature at night. Then you connect at all those points. You will see a simply line, but you will miss morning temperature, afternoon temperature, highest temperature, lowest temperature. So the information is incomplete. In the same way, line chart shows only closing price. It ignores the opening point, higher point, lower point. That is why line chart is simple but incomplete. So let's come on the bar chart. Second type is bar chart. Bar charts shows complete OHLC data. So it gives more information. Uh, so we understand with example. Imagine your school's report card. If it shows only final marks, that is like a line chart. But if it shows test marks, assignment marks, attendance, and final marks, that is like a bar chart. More details are available. But here candlestick charts, Japanese candlestick chart, this is the most important chart. It also shows the same points: opening point, higher point, lower point, and closing point. But in a visual way, and it's easy to read because as compared to these line chart and bar chart, these these candlesticks are more important, and because it's easy to analyze. And we can also shows I can also show it here. Here's the bars. As you see, bars are difficult to understand. But if you see these candles, candles are easy to analyze the price movement throughout the day or any time frame. Imagine reading a long paragraph and comparing it with seeing a picture. Picture is easier to understand. Candlesticks chart is like a picture. This is why candlestick charts are called go, the gold standard. And we also have to include this is in our this class, that how candlesticks are origins means a centuries old methodology. Many people think candlestick charts are the new tools, but actually they are very old. Candlestick charts are started in the 18th century in the Japan, um, by some rice trader. This name called Homa Monisha. So they create this method. At that time, people traded rice, price changed daily. Homer noticed something, that he noticed that price doesn't move only because of supply. It also moves because of emotions. So to analyze the emotion or to observe these emotions, they have to invent something different. So they invent the candlesticks. If trades feel fear, they sell. If any greed, they buy. So emotions also reflect in the price. So later in the 1980s, as American trader Steve Nissen introduced the candlesticks charts to the world. Even today, candlesticks charts are used globally. If you see your surrounding, most of the traders to use these candlesticks to observe the price movements in the charts. Now let us understand the structure of a candlestick. This is so important. Why I said, as we understood by the help of these charts. Means as you see, there are two types of candles here, but with same high or lower point, but different opening point and closing point. So how this is important? So if you see candle OHLC point, and during the formation of any candle, it's bullish or bearish. It's just dependent on two major things. It's buyer or sellers. If buyer winners during the battle of buyers and sellers, then it is in green candle, and opening price is greater than closing. Opening price is lower than closing point. If seller is winner, then opening price is greater than closing price. So it's important to understand whether it is a buyer or buyers buying candle or selling candle. So by the help of colors, we can also identify its buyer winner or seller winner. So we also understand with the example. Imagine a shop. Many customers come to buy products. If many customers come to buy any products, its demand increases and shopkeeper increases their price. That upward movement is like bullish movement. So in that case, candle is bullish. When buyers dominate, price moves up. That creates bullish candle. Means closing point is higher than opening point. I can write here how I can. Means this is 2 rupees. So this is 2.2 rupees, and this is 4 point, and this is 5, and lower point is 1. And when you see in any bullish candle, closing price is always greater than the opening point. So we call as bullish candle and buyers winning candle. And on the other side, there is a bearish candle where opening price is greater than the closing candle. Yes, here you can see it's 2 and opening price is 4. higher price is 5 and lower price is 1. In that case, opening price is greater than closing point. Imagine people start selling products, supply increases, price falls. In that, downward movement is like bearish movement. Means every candle which tells us who is stronger, buyer or seller. Means it's a battle between buyers and sellers. Now let us go deeper and understand body and shadows. Means decoding the body and shadows. Means this is real body also indicates the stronger movement or weaker movement. If this real body forms just little bit, means it's a weaker movement, means less volume. As you see here, there is a less movement, means less volume. And here's the strong body, means strong movement in these candles, means strong volume, means more number of buyers and sellers in are present during that period. And here's the upper shadow point, means high point, it's 70. It's the lower shadow point, low point is 58. Here's the opening point and closing point. If the body, core body, the rectangular middle body is greater, then it's stronger movement. The real body is the rectangular part. It shows the difference between opening and closing point. Imagine we can also understood by its example. Imagine two teams playing tug of war. If one team pulls very strongly, means the rope moves far, that is like long body. Means here's the game tug of war. Means if two opposite teams playing tug of war, and if one team pulls very strongly, the rope moves far. This is like that is like a long body, strong movement. Long body means strong buying, strong selling. If buyer creates a pressure, buyer pulls more, then it's buying candle. If sellers pulling more, it's selling candle. And here's the upper shadow, means here's the highest point where the rejection from the seller side, and here's the lower point where the rejections from the buyer side. So we have to understood very deeply that what's the meaning of these wicks, upper shadow and lower shadow. If any price moves upward up to 70 rupees, then there is a rejection from 70. There is rejection from the seller side, and here's the rejection side from the demand side, means buyer side. Now that we understand candles, let us understand how time works in charts. There are mainly four types of time frames. It's first is monthly chart, weekly chart, daily chart, and intraday chart. And during these time frames, have you seen these different types of time frames? 1 minute, 3 minutes, 5 minutes, 15 minutes, 30 minutes. So we have to understand which time frame is suitable or not. Now we will understand a very important concept is which time frame helps in which kind of trade. Time frame simply means the duration of one candle, like day candle. It's the duration of whole day from 9:15 to 3:30 p.m. In simple words, time frames tells us how much time one candle represents. It this candle represents a daily time, means 9:15 a.m. to 3:30 p.m. There are different types of time frames. Monthly means in a monthly time frame, one candle represents one full month. Means here. So this one monthly movement means in a monthly time frame, one candle represents one full month. So if you see 12 candles together, it's of 1 year. Means one two these all candles means Y constitutes of 212 candles. It's it's makes 1 year. Imagine you track your monthly expenses instead of writing daily expenses. You only record total monthly expense. That gives you a better picture and bigger picture. Monthly time frames works the same way. Means monthly chart shows the big trend. It ignores small daily movements. That is why long-term investors use monthly charts. Means if you want to uh, invest your money for this couple of months, then you have to analyze the charts on monthly time frame. Means according to monthly time frame, you have to see the or analyze the or observe the price movements during the monthly time frame. And imagine school tests. You give weekly tests. Every week shows your progress. That is similar to weekly time frame. Means on weekly, means here it's a uh, weekly charts, means shows the price moves, uh, how news and everything is reflected in this weekly time frame. Now come to the daily time frame. In a daily time frame, one candle represents 1 day. Means think about your daily routine. Each day is separate. Each day has its own activity. Same as in the Indian market. Daily charts works in the same way. Now comes to the intraday time frame. For example, 5 minute candles, 15 minutes candles, and 1 minute candles. Imagine using a camera zoom. When you zoom in, you see more details. Small time frames are like zooming in, large time frames are like zooming out. It's important to understand the uh, various kinds of time frames. If you want to do scalping, means just very short term entry in a trading or in a market, means on 1 minute or 3 minutes, 5 minutes, then you have to understood the time frames, shorter time frames. So now let us understand what noise means and what signal means. So what it means. In the market, not every movement is important. Some movement gives useful information, some movement is just noise. This concept is called signal versus noise. Means signal means useful information that helps decision making. Means if any trader wants to get the entry for the long term, means more than a month, means for the couple of months. So for that trader, shorter time frames is like a noise. It's not for using for their signal. But if they choose monthly time frame, then for that trader, it's using for the signal. Means they can collect some useful information. Means getting some useful levels. By using that levels, they can doing the proper entry or exit point. Imagine to for the better understanding, we also um, understand by real life example. Imagine you are on an important phone call, but background has noise, traffic noise, people talking, and horn sound. You focus only on the voice. That voice is signal. Everything else is noise. Means you have to choose the better time framing during the trading. If you want to enter on the daily time frame and you choose the monthly time frame, so it's not a good decision, and you are not getting the better results and better levels on the monthly charts to get the trades on the intraday points. So random small movements or noise. There are mainly two types of traders: long-term investors and short-term investors. And if you are a long-term investor, you have to choose the daily, weekly, monthly charts, and you also have to analyze the fundamental charts, fundamental data like qualitative data, quantitative data, all fundamental things. And by using fundamental, you have to also choose the best time to enter in the market by using monthly charts. Means here you can see, here's the peak point. Means if anyone wants to enter in the Reliance. Is the Reliance is the good stock by using fundamentally, but we cannot enter at that time. So we have to understand the entry point or exit point by using technical analysis. Only by using technical analysis we can predict the entry point and or exit point. So we can understood by an example. Imagine traveling from one point to another city. We don't focus on every small road. We focus on main highways. That is called like long-term investing. And long-term investors prefers monthly time frames and more than monthly time frames like 3 month time frames. So it's very important to understood which time frame is suitable for different kind of trader. If there is a trader who is scalper, then for that it's a 1 minute, 3 minute, 5 minute, 15 minute candle is important. 15 minute time frame is important. If any investor is long term investor or maybe or swing trader, then day or weekly time frame is important. Now last slide is architect's checklist. Now let us review everything we learned today. Think of yourself as an architect. Before building a house, an architect checks everything using a checklist. Imagine in the same way, imagine building a house before starting construction. You check design, material, and means else everything. Without checklist, mistakes happen. In trading also, checklist is necessary. Like if you want to uh, if you already choose these stocks by using fundamental, then you have to see the where the entry point or exit point. So for for this thing you have to learn this technical analysis. By using technical analysis, we can work in the stock market, forex, crypto to get the better entry point and better exit point. Learning technical analysis is like learning English. Once you learn English, you can speak in many countries. Similarly, technical analysis works in many countries or maybe in many markets. And second is OHLC point, means every chart in built using opening, high, low, close point. So there are main 4 points of an candle which have to understand high point, closing point, what's the meaning of opening and what's the meaning of high point. And if there is a high point means a rejection from the supply side or seller side. So this is important to understand. Candlesticks charts helps us visualize prices means in a quick way. So today we built a strong foundation. We learn what technical analysis is, how price behaves, what OHLC means, how charts works, what candles tells us, how time frames works, how to separate signal from noise. So this is the beginning of our trading journey. So we have to understand each and everything, and we have to more work on the charts, where's the upward movement, where's the downward movement, where's the sideways market. So you have to understood each and everything means to get the entry in the market. And what's the main 4 points of any candle? It's OHLC, opening point, higher point, lower point, and high point. So these are the main characteristics of the trading to understand the trading.